Welcome to the Tavern Community Podcast. We are joined today by Ronald Zhang. Ronald is currently offering fractional CFO services to founders who need specialized financial assistance, such as fundraising, budgets and planning, financial modeling, and general financial infrastructure without the cost of a full-time CFO. Ronald, thank you so much for joining us.
Thanks for having me. I'm really excited to be here.
Yeah, we're thrilled to have you because I think a lot of the community has questions around, what is a CFO? Definitely questions around budgets and planning. Fundraising is a huge question mark for a lot of early stage founders. I know you specialize in seed to Series A, is that correct?
Yeah, for now.
Okay. I think before we get into the depths of, the whole CFO suite of talents and services, I think it'd be interesting to learn about Ronald. Where you came from, perhaps where you grew up, what your childhood was like. So maybe we start at young Ronald. Can you paint the picture for the audience?
Sure, I can talk a little bit about my childhood. So I was actually born in Hong Kong. I flew here when I was 3 years old.
Wow.
Here to Manhattan, New York.
Wow.
And I grew up here, went to school here until I was 18. And then for college, I went to University of Chicago, economics degree, 4 years in Chicago. Then I actually worked in Chicago for my first job. I was an investment banker at a boutique for about a year and a half, almost 2 years. And then I actually made my way back to New York.
Wow.
I wanted to come back to. Did that for 2 more years, investment banking as well. And then I moved on to this kind of tech-enabled private school network called Albanese, the World School.
Okay.
People in New York may know about it, and they have an interesting history as well. So I worked there for 6 years until last year. And then now I'm actually a fractional CFO, as you mentioned. So I help founders of various stages, mostly seed to Series A. It's all the things that you would want in a CFO, but you don't want them all the time, or you don't need them all the time.
Yeah, no, that's fantastic. And I do have a question, too, about Hong Kong. That's amazing, by the way.
Sure.
I was in Bangkok, Thailand in February.
Oh, me too.
Then, oh, really?
Yeah.
Wow.
Yeah, okay. I was in February.
Small world. And on my previous trip to, the APAC, that region, I did go to Hong Kong Island, which was fun. It reminded me of Manhattan. Mm-hmm. And something amazing about technology is that I actually use Google Translate's live transcription, and I spoke.
It's really strong.
To a gentleman in Mandarin, and I was able to ride the bus down to Hong Kong Island, and it's a beautiful city. Yeah. But a question I do have is, I know Mandarin and Cantonese are popular languages in that region. Were you, as a child, raised speaking both, or when you came to the U.S.?
Yeah, okay. I get that question a lot. I don't speak Chinese well at all.
Okay.
And I don't speak any Cantonese.
Okay, amazing.
So when I say Chinese, I mean Mandarin. I was raised in 80% English and then 20% Shanghainese. So ethnically, I am Shanghainese. We were in Hong Kong kind of for my dad's job at the time, and then eventually moved over to the U.S.
So we'll get into the So you go to high school, and then you enter in, what was your undergrad discipline?
Well, I started off in economics.
Okay.
I ended up in economics, but there was a time when I was thinking maybe it's not really for me.
Okay.
I didn't really enjoy it that much, to be honest, but I ended up just working out. Yeah. That's the funny thing. It was tough for a little while, and then it got a lot easier.
Wow. Okay. So you got your bachelor's in econ.
Yep.
And then did you find that initial what was your first introductory job into let's say finance or the banking realm?
I had an internship at a hedge fund back between my second and third year at Angelo Gordon, and it was kind of a risk management role, so kind of more math analytics role. I was not doing investments, but it was a good introduction into kind of just all the terms, honestly, and the work culture. That was more important than anything, and just understanding, they had a very specialized shop.
Okay.
And I was really lucky to be there. I learned a lot, and I still remember even simple things like how to present information was so critical. Okay. And I had no idea how to do it as an intern. So there was a time when I sent a document off in analysis, and I still remember the decimal points were all to the 9th decimal. So there's no way to actually read the document, even though the numbers are correct. And my boss is just redo it. I can't read any of this stuff. Fix it so it looks good. Make it legible. Look at one of my reports. I'm oh, that's what you mean. Okay.
What was your job title, by the way?
when I was an intern.
Yeah.
Risk management intern.
Risk management intern. Okay.
Yeah.
So, there's like, the MLA formatting and things and, literature. There's all these different types of, I guess, standardized formats. Like, were the formats you were seeing, are there names for these formats that the audience could like?
No, it's just like easily legible financial reports,
okay.
Right? So, for example, don't have like different fonts everywhere.
Yeah.
Like, keep the things relatively aligned so that way, like if there's a title it's like really simple, basic things that I never really thought of, because in school you're not doing financial reports. You're writing papers. Like sometimes you have charts, and sometimes the charts have really weird axes, and you didn't think about that.
Yeah.
Like I learned statistics in college, and one of the big things I learned was literally just manipulating axes to make the data say what you want to say, and how you should not be doing that as a statistics PhD. And then I just learned in finance that's 50% of the job is manipulating like how graphs look to make them say what you want to say, right?
Wow. Okay, so I do have a question from the the entrepreneurial kind of mindset side of things, which is you're saying you can change axes to maybe play to your advantage or to speak to an audience in a specific.
So I'll give you a really stupid example. So I was looking at a graph made by an investment banker several years ago, and they had like. It was like revenue growth between 2 years, and it looked like it doubled. But the axes were wrong. It started at like 6 and ended at 10.
Oh.
So it's really like the revenue was at 8 and it went to 10. But like because you start at 6, there's only like 6 to 8 is 2 and 8 to 10 is 2. So it looked like it doubled. But it's like visually misleading to put it that way.
Yep.
And I said, like, we got to change that. That's not okay. Like I think that's misleading. And they didn't even realize what they were doing, I think. Or maybe they did. Who knows?
Wow. So what would be like the most impactful axes perhaps to show as an early stage founder while, let's say, going for a fundraising attempt at like a seed stage?
Well, I want to get away from like axes and just say, it's good to be truthful. I know that in the startup world, it's very tempting to try to manipulate your data to say a certain story.
Yeah.
But you lose credibility really fast because the market, or rather that venture community, is really small. If one VC sees your data and says, hey, like that's misleading, they're going to remember that. And then they're not going to give you references and referrals to other VCs who are going to join in on the round.
Yeah.
Right. So you can't fundraise anymore. And then they're going to remember that's you who did it. Because at the beginning, like now that we're talking about startups and stuff, the brand is not that very strong. Right. And like realistically, people don't know Tavern very well. Nothing against Tavern. They know you, Frank. They know Ben.
Yeah.
But they don't know the brand that well. So your personal reputation is much more important.
Got it.
So I always, I'm always going to encourage like actually doing the data correctly and not trying to play around with like the graphs and try to play around with data saying, oh, our ARR grew like 1,000,000%, and then it just doesn't. It's like come on, it didn't happen. Right?
Yeah, well, I think.
Like, have you seen about the recent thing with 11x where the ARR was like exploding like crazy, but then it turns out they have tons of chargebacks because they had a 3-month
interesting
trial period where you can get a full refund.
Okay.
And then people were just activating the refund.
Wow.
So your revenue would go up, but then you have a cost of revenue that was also exploding along with revenue. So your actual real revenue is tiny. And that was a huge problem.
Yeah.
But they were so honed in on the top line revenue, and I guess who knows why no one caught it. They raised money, and then later on it was caught, and then that became a huge like lawsuit problem, I think.
So this is a critically important, I think, collection of let's say line of wisdom is be honest, right? So tell the truth.
Yeah, people are gonna find out. Like it's so funny because it's not even like be a good person, right? It's like this is a practical problem.
Yeah.
It's practically better to just be honest about what your numbers are.
Yeah.
Because people can probably help you solve problems. They can't help you when you're lying to them.
Yeah.
So it's better to just be honest. Just like even if you want to lie, just be honest anyway. Because it's going to help you long term.
So for the community who are at the seed stage, or let's say they're pre-seed to seed, they're preparing to raise beyond maybe a friends and family round. Mm-hmm. What kind of financials should the community think about organizing internally and having in like a tight knit kind of bundle for that initial outreach?
Yeah, that's a loaded question because every startup's different, right? Like, so a software company is going to have to care about ARR. They're going to have to care about churn, right? There's different metrics, and I guess MRR if you're really early and don't have a year. But like, I work with a couple CPG companies, so they don't have ARR, right? Like they're transaction based, so they look at transaction volume, right? Like number of widgets sold, and like they think about like break even periods and just different things that every metric's different per company. So it's hard for me to say like, oh, these are the ones you care about.
Yeah.
Yeah, it's hard for me to say. Like I can talk about a specific company, but then I don't really want to talk about specific companies I'm working on now, so to speak.
Yeah, for sure. So I guess like I've heard of so CAC, for instance, right?
Customer acquisition cost, yeah.
Yeah. So for, I guess in addition to CAC, like are there any like high level metrics that I guess all founders should be tracking or should be aware of?
In software, actually, so CAC is an interesting one because that one, it's funny that you pull that one out because that's like one of the few that actually works pretty much across industries.
Yeah.
Because it like a cost of acquisition of any customer is still at the end of the day a dollar amount.
Yeah.
That comes back versus ARR is specifically around subscriptions. It doesn't make sense for a gadget. You can't use that for gadgets, but you can use that for subscriptions. So CAC is actually pretty relevant no matter what. And then LTV is pretty useful for software specifically because with subscriptions, like there's a certain amount of years before customers are like, oh, maybe I don't want this or I want to do something different. So the LTV is actually calculatable.
Yeah.
And that, again, LTV is also kind of weird because you can use that for CPG if customers come back to buy it again.
Yeah.
Like, for example, mics like this, right? If you have like, if you know that the mic will break in 5 years, let's say, then ideally a customer should come back and buy it every 5 years. So you can actually calculate like an LTV out of that. Yeah. Versus subscription, which is really straightforward because it's just how many years are they on you before they ultimately say no or they roll off. So LTV CAC, definitely a big one. Everyone should like, especially because most startups are software startups. Those are two numbers that you definitely need to know. Like in SaaS world, like ARR, churn, LTV CAC, those are all really good metrics to have. Probably by seed.
Okay.
Like if you don't have it by seed, it's really hard to raise.
Yeah, got it. And is there like a like the relationship between for the audience too, LTV, lifetime value?
Yeah, lifetime value.
And is there like a basic equation we could share?
I don't remember off the top of my head, to be honest, but the idea behind it is the amount of revenue you're going to generate from a single customer, right? So, for example, if you have a subscription that says it's $29 a month, every month for 12 months, right? So let's say $30, just around, it's $360 a year. Yep. And let's say on average, your customers stay with you for 3 years. That's 360 times 3. Yep. So that's what, $1,080. So that's your average customer lifetime value.
So the relationship then between LTV and CAC, is there like a industry standard ratio, say, in which like you want to be at least at, let's say, 40% higher than CAC?
So it depends, but like I've seen like 4 to 1 be a pretty standard ratio. So 4 times LTV to 1 times CAC.
Got it.
That's pretty good. And you don't want to be too high because then it makes me wonder, could you have been marketing more to get more customers? Like, are you not actually marketing enough to get the word out? So actually your revenue is understated. And then if it's too high, that means you're spending a lot of marketing and not getting revenue, which it just means you have bad marketing.
Got it. So sweet spot you would say is around the 4x.
I mean, it's like the thing with finance is that all these numbers, like, it's like, for example, in private equity, everyone wants a 20% IRR. Yeah. But the reality is like things actually never turn out that way, right? If you look at the industry average return of private equity over 10 years, it's like 15. Yeah. Gross of fees, right? Before the fees is 15. So the 20% is more like a benchmark or like a hurdle that you think about, but it never ends up being that way in any specific case. It's like how statistics, they'll say like, the average person has XYZ. It's like, that's nonsense. The average person has like 1.9 lungs or something because some people are born without a lung. That's like that's a useless number to use. Yeah. So 4 to 1 is just like a general idea. Like, I think some VCs might care more about using that hurdle. Some VCs care less. I think a good VC will usually use that as like one of many metrics to think about your company. Yeah.
When it comes to, I've heard questions about like a general, let's say, pie distribution of budget. I know one of the roles and services that a fractional CFO would provide is helping around budgeting, right? So let's say a group has $1 million and, they're roughly thinking about, okay, what should we allocate percentage-wise to, let's say, sales, advertising, marketing?
Yeah.
at a high level versus, let's say, product development versus, let's say, human capital?
Well, in the beginning, your marketing and sales budget is human capital.
Yeah,
because
exactly.
You're hiring a
Depending on the
GTM
stage.
guy or a sales girl or sales guy and GTM girl, whatever it may be. That's where the capital gets allocated.
Yeah.
And then product is, I guess there's like AWS fees for a lot of like software companies, but then you're also hiring engineers.
Yeah.
And then depending on how you look at it, like it's not so clear cut, unfortunately.
Yeah.
I know like these are questions everyone wants to hear the answers to, and the answer is always going to be it depends, and that's a sucky answer, I know.
No.
But it is actually the real answer. It
it's
does
an honest
depend.
answer.
And it comes down to the same idea of like the average XYZ is like a meaningless metric because it's like aggregate across 1,000 people, but you specifically will have a very different number.
Yeah. So a lot of early stage founders, they're looking across the landscape of, okay, how do I structure my company? Do I go LLC? Do I do a C corp?
Okay, this one's actually pretty easy. You should never do an LLC because then you can't raise money. It's so painful. Like I haven't done it, right? And I've read about like, oh, what do you start out as? It's like a Delaware C corp's good.
Okay.
You have to start up founder stock. It's like a specific form. I haven't looked at this in a little while, but there's a specific form of founder stock that gets under the QSBS exemption that allows like extremely good tax benefits for founders specifically, early backers of companies. But you have to have a C corp for that.
Got it.
And it's just, I know like no one wants to deal with double taxation, but this is just it's like a non-starter, right? Like, don't worry about your taxes 10 years down the road if you can't even raise seed capital.
Yeah, for
right?
sure.
So that my view is C corp.
Okay.
Don't do an LLC. Don't try to do like S corps or some other games. It's not worth it. It's really not worth it.
Yeah, and so I suppose a lot of, at least in the YC community, the YC safe is like a standard document used in early stage. Some founders have questions around like convertible notes and whether or not they should get into like that, that side of either starting to accrue some sort of debt.
It depends on what stage. I know what you're trying to say. So, like, if you're really early, if you're pre-seed, there should be no notes. It should be saves. Like, keep it easy, right? Because you're pre-seed, you're just an idea. You don't have, you may not even have revenue. You definitely don't have PMF. So just put safes down because it just speeds things along. Otherwise, you're spending time like thinking about terms.
Yeah.
That's not a good use of time, right?
Yeah.
As a founder, you need to spend your time on just the stuff that really builds out like your engine, right?
Yeah.
Your startup engine. And the engine is what pumps out value. So if you're worried about like, oh, this guy has a 1x preferred return and there's like a discount, there's too many different things, like drag along rights and all those things. Like that's not, it's not worth thinking about in a pre-seed. Just sign the safe. Like get people to sign safes. That's just the easiest way to do it.
Yeah.
After seed, then you can start thinking about weird things like convertible notes. I know it's very popular. It can be a very dangerous tool. And I say dangerous in the sense that most founders have no exposure to how debt instruments work.
Yeah.
And then when they sign, sometimes they don't fully understand the ramifications of that.
Yeah.
It's like how people sometimes, when they get a mortgage and they don't recognize how bad it can get if they don't manage their finances, and now they have to pay a mortgage and they're late on it. Like it opens a huge can of worms. And at pre-seed, you don't want to deal with that.
Got it. So, on the fractional CFO side, I know some companies, and we are going over these questions because I think some potential teams out there who are looking for fractional CFOs would probably ask a series of questions around like the fundraising, budgeting, planning side. The financial modeling side, what types of models can you assist with as a fractional CFO if you're coming into an early team?
Yeah, so in my experience, the models are pretty simple, right? So I'll contrast this with my time at Avenues, the World School. So that model was insane. I had like 60 tabs and like 1,000 rows, and it was ultimately just a 3-statement model, but it was so complicated because we had multiple campuses, hypothetical campuses, a bunch of scenarios. Like it was very unwieldy. But for a company that was that large, we had 4,000 students and 1,000 faculty and staff, like a big organization with multiple jurisdictions. Like we were in the U.S., in China, and in Sao Paulo and Brazil. We had an online school that was global. Like you need all that complexity, and then you need a person dedicated to actually managing that. And that was my job, right? Like I built and oversaw that model. But for a startup that has like one SKU and like 3 people,
Yep.
And maybe you're going to hire a couple more engineers and marketing people. You really don't need anything more than like a simple one-tab model.
Okay.
And that's actually what I ended up doing several times. I built several one-tab models.
Okay.
For kind of, and it's what I like to say is it's catered towards non-finance readers.
Got
so
it.
you don't have to really know that much about finance to be able to read it and also utilize it. Like I was talking to one founder a little while ago, and he said what was really nice is that the way I format things, I try to just highlight the important stuff, and then you just don't have to worry about the other stuff. There's commentary and all that to help you with the flow. But all that really matters in an early stage company, and this is true with small businesses too, is your cash position.
Okay.
Everything else doesn't matter, like from an internal perspective. Obviously, from fundraising and like to talking to investors, there's a lot of different things that matter. But you internally, as an operator, only need to care about cash position.
Okay.
Everything, like in an ideal world, you just collect like money, you get revenue, and have no costs, and it goes straight to cash, right?
Yeah.
Like that's the perfect world.
Got
and
it.
Ideally, too, you don't do any work for it.
Yeah.
The second most ideal form is not only do you collect cash, but you collect cash from the future, which is how SaaS companies work, right? You're paying like from a customer point of view, you pay a subscription in the beginning of the year, and then you receive the value of the subscription over the year. But from the company point of view, you just got paid like $1,000, and you don't even do anything for it. You then have to do something over the next couple of months, but you got it from the future.
Yep.
And so that's like the ideal world, right? And then everything else comes slowly from that. Like, oh, now you have to pay to do that. You have to pay salespeople to get the contracts. You have to pay the engineers to build the product to actually provide. So what really matters is cash. And so that's one thing that like I always highlight in bold and different color and like make it really obvious. And then when it goes negative, that's when you need to raise money.
Yeah.
Which of course it's always negative in the beginning.
Yeah.
Like, and so what founders don't realize is like that number tells you what you need to raise. If you have a proper model with a reasonable understanding of what it actually costs to run your business and reasonable understanding of how much money you're making over a set period of time, that line is literally, the sum of that line is how much money you need to raise.
Yeah.
Because that tells you, like the cumulative cash position that's negative tells you how much money you need until you get to positive.
Yep.
And then you don't need to raise money anymore because then you have cash.
Yep.
And then you don't need other people's cash. You don't need investors' cash. So that's like the key thing that I try to like always like nail into the founders' heads. It's like this is the only thing that really matters is your cash position.
Got it.
And so that's why the model's really helpful because there's no way to kind of easily see it if you're just talking to engineers, talking to salespeople, talking to customers, and you don't really know where all the numbers go, and you don't see how the cash flows until you actually get the model down.
See, that is a very valuable service to provide founders. So it sounds like for early stage groups, say they've built some sort of product, they've launched it in some capacity, they're starting to earn some money. Part of the services that you can provide are creating some of those financial models, calculating their cash position, and then helping provide insights on how much they even should try to raise, right?
Yeah,
like stage. Okay.
It will tell you how much you should. Well, so again, because a model is like, I didn't really say this earlier. So a model is only like a simplification of reality. It's never true. And like, I think there's this weird view, I think in large corporate, that models tell you like the future, but they don't. They're like all wrong. Every model I've ever built is wrong, right? Because like nothing is exactly to the dollar. It never is that way. Even a month out is never exactly to the dollar. And that's okay. But it gives you a sense of what the future is supposed to look like based on what you think is going to happen to get there. And so, for example, if let's say I have a model that's like, oh, you need to raise $4.8 million, then just raise 5, right? Like give yourself a little cushion. Honestly, raise more than 5. Raise 5.5.
Okay.
And maybe, when you're actually doing the calculations, play with assumptions so you actually understand, like, what do you actually need to get to 5.5 as well?
Yep.
Right? So that's like a better use of the model versus just saying, oh, the model says 4.8, let's raise 4.8. Because now you have no wiggle room.
Yeah.
Like, if any of your assumptions are wrong, then you're screwed because you haven't raised enough. And then you have to go back to investors and say, hey, sorry, we actually messed up. We need more money. And that's really hard.
Yeah.
That conversation is really hard.
Got it. I know we have this really nice chart here talking about power law and talking about IRR, internal rate of return.
Yeah.
For the audience who's not familiar with internal rate of return, can you maybe provide a definition?
Yeah. So I guess I don't want to get too far into like the entire venture ecosystem and like how they measure everything, but I guess so. IRR is one of the main, but not the only metric that VCs use to measure their performance. Kind of like it's a KPI. There we go. And so there are like industry-wide targets of what their investors, right? So just stepping back a second, VCs don't invest only their money. They invest other people's money. It's a mix of things, right? It can be wealthy individuals. It can be like pension funds. It can be endowments, family offices. That's a hot topic for a lot of people.
So this whole topic is fascinating. This is wisdom that a lot of people aren't privy to, but also that a lot of founders, it's like if they knew the ins and outs of this, they'd actually be able to maybe prepare better for their rounds, et cetera, et cetera.
Yeah, I mean, I try to balance like more knowledge with useful knowledge, right? I can probably run through like the venture funding ecosystem, right? But I don't know how useful that really is to founders. I just like to think about this stuff. I like to look this stuff
it is fascinating.
It's like fascinating to think about, right? Because
there's not a lot of content around it. So it's like this niche.
But it's also all public. All this stuff is public information.
Yeah.
But for some reason, no one really knows.
Yeah, but synthesizing it or like communicating it in a accessible way, I think
that's
is
true.
Very
Signal
valuable.
versus noise, of course.
Oh yeah.
So so maybe I'll just start off with this. So, from the perspective of the founder, it's probably the easiest way to think about it. So, as a founder, you're usually raising money from investors who are either family offices, like wealthy individuals, or venture capital, right? Because no one else is willing to put that much risk or deal with that much risk. And so let's take away like family offices and wealthy individuals for a second, because wealthy individuals, the fund flow is really straightforward. Someone's rich, gives you money. That's it, right? There's nothing else. But with VCs, there's actually something more complicated where they have what's called LPs, limited partners. And the term comes from like the legal structure. So VCs, venture capitalists, are technically general partners of a fund. The general partner manages the fund, which is a pool of money, but the pool of money comes from the LPs, which are the limited partners. And those LPs are like endowments, pension funds, family offices, and wealthy individuals, foundations too sometimes. Like, for example, I think Yale and Harvard probably have some sort of venture exposure. Maybe they don't, but I wouldn't be surprised if they do. Those institutions, however, get their money from people as well, right? Because the person in charge of an endowment fund is not worth $80 billion at Harvard, right? Like they get their money from the Harvard endowment, which is primarily accumulated from like donations of wealthy individuals and also other alumni. Yeah. And then also, there's pension funds. We get their pension from literally pension funds. So, there's a firefighter pension fund, police pension fund, teachers pension. Like Texas has a Texas teachers pension fund. Like that's a whole thing, right? New Jersey has like treasury and they pay for their employees. So all is to say, like it all kind of comes back, right? Because a founder could be a former New Jersey teacher, or government employee, and then they have their 401k or pension fund flow into like an LP, which is the treasury, and then that treasury invests into VC. So it's like a giant circle. Yeah. Right. And so that's the ecosystem. Poorly explained. I usually do a better job of this, but it's a giant circle, right? So what you need to get from this is that VCs themselves have, I guess, kind of like how they're evaluating you to see whether you're worth their time. Yep. They're also being evaluated by LPs if they're worth the LP's time. And so the IRR metric is one of the many ways you do that. There are other metrics. They don't matter that much to a founder, but the main metric, the reason why IRR matters is because you can really easily figure out how much you need to be worth to a VC just by doing simple math. Yep. All you need to know is how many portfolio companies they have and how big their fund is. Yep. And then you can kind of have a sense. Like, it's not entirely true because this is, again, it's like a mathematical model, which is what I calculated. Yeah. You can kind of have a basic, not super true, but kind of true sense of how much you need to be worth, literally, as a company in, like, let's say 5 to 7 years for them to even want you. Got it. And so, if, for example, if you say, like, hey, we're going to be worth, like, $50 million, that's probably a non-starter because VCs usually want you to be worth, like, hundreds of millions of dollars to make it worth their time, right? And ideally, unicorns, especially the early funds, right? Early funds and later, like VCs who just started, usually only have enough capital for like 10 to 20 companies, and they can't make very big checks, which means that they're really just hoping on like one guy, one founder to return the entire fund. So that's kind of what I calculated. So I calculated like if a fund is worth like based on how many investments they have and what their return hurdle is, which is in like venture world, like about 20% is pretty good. That's like the minimum before you start thinking like maybe I should invest in a different VC, like as an LP, right? Among other things, there's obviously tons of other metrics to use, but the IRR metric is pretty important. And so if you yourself don't have the potential to help them hit 20% over 5 to 7 or 10 years, then that's already a non-starter. So that's why like that's why startups are always, usually the successful ones have like insanely broad visions, very bold visions. And for example, like Built Rewards, very topical because so many buildings in the US are using them. Like they're going to try to be in every rental building in America, right? And then hopefully globally. That's a gigantic vision. But that means that they're probably going to return over 20% if they're successful. Yeah. Who knows if they're successful, but you need the hope. You need the vision, the bold vision to being successful in that way. Versus, if you have like a small kind of, I just want to be, I want to be the best like taco truck chain in New York City.
Yep.
Like that's a tiny vision. I mean, a taco truck makes what, like $100,000-$200,000 a year in revenue, like an okay one, right? Somewhere in the middle in performance. Even if you have like 10 of those, that's $1 million. 100,000. So it's $1 million in revenue. So let's say you have 100 trucks, so $10 million in revenue. Yep. If you're raising capital to say, we're going to hit $10 million in revenue, well, that's not a $1 billion company. That's a $10 million company, right? Like that's not worth any VC's time, especially if you don't even have a truck, right? You're just thinking of making a truck in pre-seed. Yeah. And you've only figured out that this location's really good, and you've operated many taco trucks in the past, but you've never done it, or you've operated different kinds of trucks, but you never actually operated a taco truck. So very simply put, it's just not a venture investment, so to speak. So those scaling questions, like the magnitude of your vision directly correlates to whether or not you're actually going to get VC funding.
Wow. Okay, so this is, and this is also part of the value of a fractional CFO who understands this, right? So you're bringing this kind of wisdom into a team and maybe helping craft a financial narrative that aligns with like what the VCs are actually looking for.
I think so. I mean, I hope that I'm helpful in that way.
Definitely.
I mean, the funny thing about venture is that you don't know if you're right until like 5 years down the road. And that's true about the VCs too, right? So first-time VCs who don't have experience running a fund, they also don't know if they're right until like 5 years down the road. So everyone's trying to figure this out together. That's like the most important thing to understand in like startup world in general. Like I may have experience building schools, which I do, but I don't have experience like running software companies. I just understand numbers really well. Yeah. And sometimes that's all you need because VCs are financial investors. They are not like feeling investors. I mean, they also invest with their feelings, but they're not investing in your feelings. They're investing in the numbers. And so as a numbers guy, that helps me understand what is actually their incentive and where are they aligned? How are they sometimes not aligned with startup founders? Which I'm happy to talk about, not in a public domain.
Yes. Find us at a upcoming Tavern event.
Then I'll tell you how some VCs will not be aligned for you and may not be working with you.
That is
you have to be very careful about that.
So I have a question about valuation strategy. Okay. Let's say you're at the seed stage and you're raising 2.5 million, right?
Sure.
At the 70 to 124x kind of unicorn exit multiple, say that power law, like you need to somehow justify. It sounds like how does this become like $175 million company? Yeah. Are there any early strategies to kind of paint that picture during that initial investment stage that you would recommend to justify a valuation that is speaking more to that unicorn kind of strata?
Yeah, I mean, a big part is, so a lot of VCs talk about TAM, so total addressable market. The biggest way, the fastest, like most clear-cut way is to talk about a very large TAM. Yeah. If you're not addressing a large market, there's no chance you'll get big enough to matter, right? Got it. So if your TAM is just New York City tacos, again, it's just not a very big market.
Yeah.
Even if you owned every taco truck in all of New York City, it's just still not a very big market.
Yeah.
But if you're in every rental building in the world, that's a really large market.
Yeah.
And so there's this like common line. It's like, oh, if we can just get 1% of the TAM, we'll be a multi-billion-dollar institution. Like that's a really classic line. I've started to not really like it just because it's so overused, and I know some VCs don't like it either. But it is actually like a commonly used line. Like it's it's $1 trillion market, and we'll get 1%, so that's $10 billion.
Yeah.
Like that's worth it, right? I'm $10 billion, so you can invest in me when I'm only worth $4 million, and you'll be along for the ride. Like that's a great story to have. That's like one of many ways, I guess, you can craft a story around it.
Got it. So I guess when an early stage team is deciding, should we go the VC route at all? Like, is it fair to say that they should look at their use case and say, can we with a straight face craft a narrative or plan that would arrive at this, 70 to 124x return that fits in this power law model? And if so, then yes, we should go for that route and prepare accordingly. Yeah.
So I think that's a good way to put it. It's like the use case of your tool, but also the vision of how the tool evolves.
Okay.
So like, for example, a lot of times right now we have point solutions, which is getting a lot of heat because point solutions is a really efficient, fast way to raise capital and do well, but it's not like a venture scale investment. So with taco trucks, I keep talking about taco trucks because it's just on my mind, but like, if the point solution could be like napkin holders for the taco truck.
Yeah.
Right? It solves one problem.
Sure.
But like a better solution should be procuring all the things for a taco truck. And then even the better is like being the back end platform that administers all taco trucks.
Got it.
Right? Like that's the way you have to think about like big scale.
Yeah.
And I don't mean all taco trucks in New York, but like all taco trucks, period, globally, right?
Yeah.
Like, because theoretically a taco truck should be operated very similarly from one to another, regardless of what country you're in, because they're all trucks. They all have like certain ingredients. They all have, certain market and demographic commonalities. And so if you can support all of them really well, then that's a platform that kind of supports a huge scale. And like that's much better than saying a point solution of like, we build better napkin holders, or like we have better tortillas or something like that. That's too narrow.
Got it. And as a fractional CFO, can you help with that kind of product analysis with a team and say, maybe there's a wider opportunity here?
Yeah, I mean, the funny thing is like, that's more business strategy than finance, right?
Yep.
So I can still talk about that. I'm happy, as we are talking about it right now, I'm happy to do that kind of strategic work. It's one of those skills that I have that is not technically, it's not strictly finance. It's more just broad business strategy. I'm happy to provide that as part of like the service package, I guess. Kind of comes implicit.
Yeah, definitely.
Yeah. A good CFO should be thinking about these things. Like they shouldn't just be like, in public world, it's like EPS goes up. Like that's not enough as a CFO. You need to be thinking more strategically about the whole business and what actually brings value to the customers and then therefore to the company.
Yeah. So when it comes to publicly available data, I know you can find, for instance, the number of positions of most VC firms publicly, right?
Yeah, because they post it.
Yeah, exactly.
Yeah, you can just count them up and see like, oh, this fund is
exactly.
They have 12 positions, and also you can kind of back into it too. So pre-seed, you're not signing like $1 million checks. You're signing hundreds of $1,000 checks.
Yeah.
Which means if you have 10 positions and each of them is like 100,000 on average, let's say, you can pretty much guess that the fund is only 2 million, right?
Yep.
10 companies, 200,000. So you can kind of back into how big the fund is.
Yeah.
Because they're not going to tell you.
Yeah.
They don't want to tell you necessarily. When they're raising big funds like Fund 2, Fund 3, then they're happy to announce, hey, we raised 50 to 100 million.
Yeah.
Because they don't have to say, hey, we only had 5 million in the first shot.
Yeah.
They don't want you knowing that.
So
there's a lot of reasons why.
Oh yeah, definitely. But it is that there's a correlation between number of positions and this power law, right? Meaning, even as an early stage startup, you can also take a risk in some ways by taking a chance with a lesser known fund, maybe a younger fund, right?
Yeah, definitely.
And maybe have a higher probability of success in terms of raising a seed stage round or something like that.
Yeah, for example, like with emerging managers is like the LP term for first time VCs. Like they need to really prove that they're good at specific things. So as opposed to Sequoia, who is like the gigantic beast that like can do anything they want because they have lots of resources, a small fund doesn't have that. Usually that's just one or two people. Yeah. And so how much can they really do for you? They're not going to have a marketing team for you. They don't have a value add strategy that involves like a finance person, an operations person, like a customer success like expert. They don't have those things. So they have to find other ways to really prove that they're the best VC for the job. And so usually what I've seen is like, or at least some of the times I've seen it, is they provide a lot of help to founders, like mentorship or like more one-on-one help. They can kind of like work for the company, so to speak, in some certain ways. Like not everyone does it, but I have seen it happen. It's kind of what they call value add services. I think, for example, well, going back to like the larger ones, like if I name them, do I get an ad cut? Maybe like
definitely.
Maybe I don't want to name any specific people because like obviously Sequoia, everyone knows Sequoia, but like there's a New York-based VC firm that does a very good job of creating value-add services or providing value-add services to founders. I spoke with them like in the winter, but they do a lot for their founders. They're one of the few VCs that have like a dedicated team of people who are like marketing people, ops people, finance people, CX people, or whatever it may be, and they actually go in and help like dozens of founders at the same time. They're like essentially fractional everything. So like fractional COO, fractional CFO, all that stuff, in a very like weird form of it, I guess. And there are not that many VCs that do that for founders.
Okay.
I think that's like a pretty cool strategy because then that helps them founders who can't afford and they don't want to also search for someone like me. Like anyone listening to me has essentially free marketing, right?
Yeah.
Or I gave free marketing to them so they get access to me. But not everyone can do that. Not everyone's listening to a podcast, which means they should, everyone listening should listen to this podcast. But with this fund, they just give you access to all the fractional help you need. That's just so much more attractive than a VC who's like, I'll give you $1 million. Yeah. And they're like, okay, and? Yeah. Right? Because this fund's going to give me $1 million and a bunch of fractional help. Yeah. That's so much better. Yeah. So that's where like the emerging, like the first fund VCs, the emerging managers really need to like have something that's super special about them, both from the founder side and also from the LP side. So it's like,
got it.
That's like the perspective that I've seen with emerging managers, and they're having a tough time right now because of like what's going on with the market overall.
Yeah, that's actually that's fascinating. So similar to how there's like a differentiation between accelerators and let's say venture studios, right? Mm-hmm. If the audience would like to research further some of these VC firms that offer fractional services, is there like a category or like a search phrase that they can?
So these are not accelerators or incubators or anything like that. Like that's not what I was referring to. This is a pretty unique model. I haven't seen very much of them. Like very few. It's the only one I know in New York, frankly, that does this. Okay. So anyone who knows what I'm talking about knows immediately who I'm talking about. I'm just not going to name them unless they want to pay me to name them. But they're
put in the comments.
Yeah, it's pretty interesting what they do. But for incubators and accelerators, like there's various levels of like, there's a lot of mixed feelings about like what an accelerator does, right? Like I've heard things about Antler, about Techstars, and how much they help you. Maybe they don't help you as much. It's like a little bit of everything. And so I guess if your question is like, what should you use to search them? I mean, the terms are there, like accelerators, incubators, venture studios. Yep. Like if you just type in like your local, if you're in New York, just New York accelerator. It's like going to be a huge list of like 20 accelerators, I'm sure. Yeah. The famous ones are like Techstars and Antler, or YC is the one over in the West Coast. They're really big there. Yeah.
I suppose like if you're gauging the reputation of, let's say, a specific VC firm or even like the LPs, would you recommend that founders also do their due diligence into looking into the, let's say, track record of these individuals who kind of comprise the, let's say, core GP team at like a given firm?
I definitely recommend that because like, okay, so when a venture capital fund invests in you, it's not like they're going to send you a cash check and then ignore you for 5 years. Usually you're bringing them on because they can help you.
Yeah.
And so you need to also enjoy working with them. So there's like the vibe check, right? There's like the person-to-person interaction. And there's also what kind of skills do they bring to the table. As a founder, I know money is always tight, and it's tempting to say, oh, the first check that comes in, I'll just take it. But I actually don't think that's a great idea, because if you have a VC who like you hate working with for whatever reason, or you just can't stand them, or they ask you tons of questions, or that maybe they're bugging about XYZ, or they try to get into the operation, like that's going to really hold you back as a founder. It's going to paralyze you essentially. Like you don't want someone a year down the road like bugging you every day saying, hey, I mean, no one really does this, but this is an extreme example. Like, hey, why is your LTV not high enough? Like, you said it was going to be XYZ, and now it's XYZ minus 50%.
Yeah.
Like, that's not good.
Yeah.
It's not really a percentage number. But anyway, so you need to have, like, a sense of, you definitely want to, as a founder, do diligence on the VCs. Sometimes the best way, actually, to diligence a VC is to ask other portfolio companies of the VC, like, how do you like working with them? Because that's what VCs do to you, right? VCs are just going to say, hey, like, I saw you're on the cap table. Like, do you like these guys? Yeah. And then the other VC who already invested in them say, like, yes, no, whatever, right? And give feedback, assuming that they're friends, which is why the VC community is so tight-knit. Everyone kind of has to know each other, because the best way to, like, do diligence on a product that has barely any product and is mostly just people is to have referrals from other people.
Yeah.
So founders need to do the same thing. They can go on LinkedIn or whatever it may be, see like all the, or go on the website actually, check out all the other companies that are in the portfolio and ask the founders like, hey, was this person helpful to you? Were they like helping you with the day-to-day? Are they kind of like too hands-on? Did you leave you cold? Like there's all those questions. It's definitely worth at least one call. It's just like getting a job, honestly. Like, I think the thing is, a lot of founders think, oh, because I'm asking for money, it's a one-way street. But it's not. It's a two-way street. Just like with an interview for a job, it's a two-way street. You need a job to get paid, but you also don't want to get paid at a job that you hate, because then you're going to leave in 6 months or 3 months. So the same way, you're interviewing them too. Yeah.
So that one of the benefits of YC, for instance, is the internal Bookface platform does have a really nice review system where I can look at various angel investors and family offices and things and see the reviews of other founders.
Oh, really? I didn't know they had that.
Yep,
well,
it
I'm
is
not
private.
part of YC, so how would I have known until you told me?
It is an amazing feature, but it is an internal application. So I'm wondering, like, are there any like rate my professor style applications out there for, I guess, this use case? If not, maybe it's a
maybe that's like the next $1 billion idea. I mean, right. I don't think so. Yeah, I don't think there is like a public domain like a Yelp for VCs. No, I don't know of any. Maybe there is one, but I just don't know about it.
If you're listening,
you should
it's
make
an opportunity, perhaps. That'd be amazing if this spawns a glass door for VCs.
Yeah, and like the funny thing about like these idea gen situations is like, I've talked, this is like a kind of a tangent, but I've talked to like Wall Street types who try to go into startup world, and they're like, my idea is so good. Like, I don't want anyone knowing about it. If I'm going to raise capital, I got to have everyone sign NDAs. And I'm like, dude, no one's going to take you seriously. Ideas are like not very valuable.
Time a dozen, right?
Like the best ideas are still not very valuable, because all the work is actually executing.
Yes.
Like, I think I can understand why they say that, because I kind of had that idea when I was in banking too. When you're in banking at like a firm, you have so many resources at your disposal that's already there that you take them for granted. And then when you start off a company with nothing, like you just have nothing. Like there's no CRM. There's not even like a database. You have to build everything yourself. Like I had Cap IQ at the time, and SNL Market Intelligence, which eventually merged to Cap IQ. I had FactSet. I had Bloomberg. Like all these ways to get information. Oh, PitchBook too, because they weren't around until, I don't know, they weren't around like properly until like a decade ago or so. I don't know. They were okay back then. I think they're a lot better now. Let's put it that way. So they've grown a lot, and so you have all these resources that the company just pays for. Like, I can't complain too much about what I was being paid, because when I look back, like they paid for a ton of subscriptions for me to use. You don't have that as a founder. You don't have anything. It's just zero. So unless you're coming in with like a huge, inheritance or something, like most founders just don't have those resources. And so having the great idea is like not that important. Don't worry about the idea being stolen, because no one knows how to do with it anyway.
Yeah.
So building it is actually what's really important. That's what's really hard.
Yeah, that is. We see like the vibe coding revolution kind of spawning up.
I hear about that. It's like, oh, we're gonna just build products first and see what happens, not try to find like instead of validating demand for product and building, and now it's building products to validate demand.
Yeah,
I haven't really touched on it, to be honest. I don't want to comment because I don't really know. But it sounds like if it is the case, that'd be great. But I don't know. The few engineers I talk to tell me that like that's not really a thing. I have no idea if that's true.
Yeah, it is a tightrope walk.
Really distracted just to even talk about it because like, now it's just more noise.
Yeah, no, definitely. So I think something that also is interesting is this micro acquisition market that I've heard about from some friends. Where let's say you get your ARR up to $5,000,
sure,
and you want to do a quick kind of flip for like a 5x. Like I know that there's a group of people out there who operate in that realm of let's take a company super early stage, acquire, let's multiply out, and then flip it again. Have you seen, or are you familiar with that whole space?
Okay. Actually, I didn't know that gets down to that scale. Like I know that there's like acquire.com.
Yeah.
It's like a website where you can buy small SaaS companies, but they're usually like $100,000 in ARR. So it's a little bit bigger. Like they're usually like lifestyle businesses, and these founders or owners or whatnot, like they did it for a couple of years. They managed to build out this point solution or this small like tool, and then they're like, I don't want to do this anymore. I'm just gonna sell it for whatever I can get for it.
Yeah,
I've heard of that. And like it's kind of interesting. I don't know if I would personally do that, but it is interesting to see like the kind of businesses that are out there.
Yeah. I was just curious if you're familiar with any and then investment banking side especially, any platforms where if these if anyone's listening and they have a lifestyle business and they want to flip it, where they could go for like a quick kind of either valuation or even tidy it up, bundle it, let someone take care of it.
I hear what you're saying. I just don't really have that familiarity. Besides, like I saw acquire.com once, like months ago. I took a look at it and then kind of forgot about it. So I don't know much about it. I mean, my banking days were a different scale. Like the company, well, I mean, it depended on the size of the company, but I did a deal that's only like $88 million. Right?
Okay.
So for investment banking, that's like tiny. But then I also have done deals that are like $300 million.
Yeah.
And then I guess, that's for M&A deals. And then for capital, it goes up from there because if you issue like corporate debt, it can be like $600 million of notes. And like that's just like a different thing because it's a multi-billion-dollar company and they raise debt every couple of years to retire, like refinance it. It doesn't matter. Like that's not really relevant.
Yeah.
But it's just a very different like beast, I guess. Even though it's still the theme of raising capital and like acquiring companies.
Yeah, definitely.
The nuances are actually what matters. Devil's in the details.
Yep. So I think it'd be fascinating to look at just the personal side of entrepreneurship, and what I mean by that is disciplines like stress management, for instance. I think we live in an age where these tools they both enable us to be more productive, but also they enable more noise in our lives.
Yeah.
More distractions.
There's a lot of distractions out there.
Techniques you use to manage stress on a day-to-day?
I think so. I would say that this obviously I'm biased when I say this, but I'm pretty good at managing my stress. Probably better than most people I know at managing my stress. Like I still remember like even in college or something, there was a time where something was happening and everyone's kind of freaking out, and I'm the only one thinking like, how do we actually get out of this situation? Right?
Yeah.
Like actually thinking through like what are the steps we need? Like who do I actually talk to so we don't have to deal with this anymore? And I don't really panic, I guess, which is I took for granted when I was younger, but now that I'm like in the real world for the years that I've been in the real world, like real world being post college, because college is like this weird tutorial level to life that doesn't really count.
It's like a simulation, right?
Yeah,
contained experiment.
Yeah, it's just like level 1 or tutorial. And so anyway, in real life, like I'm seeing so many people get stressed at what I think isn't too big a deal.
Yeah.
But they think it's a huge deal, and sometimes like talking people down is can be tough. Yeah. Okay. So I guess like what helped me a lot. Well, one is like the part that I don't fully understand, which is that I don't panic. But the part I do understand is the perspective. So perspective shifting has been really helpful for me.
Okay.
Like when I first started going to like these networking events with like VCs and at the time also LP events, which was like super lucky for me, I had never really like sold anything, right? Like I never had to sell myself because I was a junior investment banker or a manager in corporate internally. And so I'm selling like certain ideas, I'm selling certain projects, but I never had to sell like my person as someone you should talk to in an event.
Yeah.
And that was kind of intimidating, especially because everybody was 30 years older than me, had white hair, had like 8 figures on me, right? Comparatively, or 9 in a couple really rare cases. Like that is really scary. But then like to help me kind of calm down so I wasn't a blubbering mess, I think what's helped was the perspective shift of like, at the end of the day, it doesn't really matter too much what I say, because if something doesn't happen, I'm also going to like 50 more of these events.
Yeah.
So there's like, I think people underestimate how many people are there outside like your little bubble.
Yeah.
And so even if you like totally mess up one interaction, there's still like 1,000 more to go.
Yeah.
And so, and people can not like you for all sorts of reasons that are not you.
Yeah.
It could be more a reflection of who they are, right? So maybe a phrase I use is like a trigger for someone, and I'm not gonna know. Maybe just the word like endowment or like foundation just pisses someone off. Who knows why? I don't know why those are neutral words, but who knows, right?
Yeah.
And they just don't like me. And does it really help me to think like, wow, that guy really, really hated my guts, and I have no idea why. I should have done something different. No, it's not really worth your time because you're just speculating.
Yeah.
It's better just put your best foot forward and try to do what's constructive, which is align yourself or get closer to the people who do like you, who do react to you well.
Yeah.
And those are the people who like helped me the most, and I've been happy to help the most. Because there's like a natural like pull. It's almost like a dating game, right? Like you don't want to chase someone who doesn't like you. That's just wasting your time. You want to spend time with people who are like, hey, I like you. Like, yeah, I like you too. Okay, great. Now we're going to keep spending time together. Like that makes so much more sense than like, I just want them. Like if an investor doesn't respond to you 3 times in a row or they say like, no, well, this is actually, I have to be very careful here because saying no is not always a bad thing.
Sure.
Actually, in that specific case, maybe this kind of kills my point.
No could be a response as well.
Yeah, no could be a good response, right? Because like no, why? Like
Exactly.
Why is it a no? Is it no because of X, Y, Z? Like that's actually good. But if it's like no, there's like categorically no reason for me to ever talk to you, then yeah, maybe fine. Okay, like let it go, right? And it's better not to speculate. I'm talking more like in the specific like networking situation where I'm just not going to see those people again.
Sure.
Realistically, especially if there's like if I'm in startup venture world and this person's like a medical device technician, it's this is a really narrow world where we're gonna meet each other again.
Yeah.
Like this tiny slice of possibility. I'd rather go for someone who's like also in venture world or like a founder who needs a CFO. Like that's someone I'm gonna spend time with.
Yeah.
If they don't like me, then I'm gonna try to figure out like why don't they like me?
Yeah.
And if the answer is like, oh, they just don't like my guts, like fine, okay, I can leave that. And it's okay because there's going to be another founder who's also in seed who needs a CFO. Like there's going to be people. And as you can probably tell, I go to a ton of networking events, whether I like to or not.
It's one of the big benefits of being in New York City too.
Yeah,
right?
they're all here. They're all in Manhattan or somewhere in Brooklyn. Some nice ones are like Navy Yard. Over in I actually kind of co-hosted some events too in Brooklyn with a couple friends of mine. Like
nice.
There's just so many events going on, like Luma. I mean, Tech Week's coming up, and it's like hundreds of events. Like, there's no excuse not to go at this point, because there should be something for everyone. Yeah, I mean, unless your product is so niche, but I don't know.
Yeah, that is honestly great advice. It reminds me of a quote: "Volume helps negate luck in some situations."
Kind of volume, if anything, creates luck.
Yeah, right.
It creates luck. Yeah.
So that's a great lesson for the audience too. Is just persistence, I suppose. Also, try to build up your volume of whatever you're doing. Like, get a larger sample size at the very least.
Yeah,
right?
definitely.
Definitely beyond 1 or 2. Like maybe beyond what you can count on two hands.
Yeah, I mean, I think it's like how if you're trying to be successful at something, you kind of have to just try a lot.
Yeah.
Like an inordinate amount of times.
Yeah.
Before you get successful. That's just the unfortunate reality. Like, yeah, some people get a home run in like 3 tries. Like,
yeah,
I don't think you should count on that. That's That's like waiting for a miracle. You can't really. You gotta like build and fight for a miracle, I guess.
Yeah. That's like another quote. Comparison is among the many thieves of joy. Sometimes.
Yeah.
So like, it's not like comparing yourself to others. It's kind of comparing yourself maybe to yourself perhaps, and just keeping up with a consistent track record so that you can genuinely, with a straight face, look at yourself somewhat objectively and non-emotionally and say, I'm doing a good job. I'm progressing, or I'm not.
I mean, I hear this a lot. Like, I don't know if I'm doing a good job. And like, you're never going to know if you're doing a good job. I think that's something that's worth accepting. It's just, you can do your best and you'll find out later if it was a good job.
For sure.
But you're just not going to know. Like, you can only judge that in hindsight. And you shouldn't worry too much about that right now. Like, what matters is that you're trying your best.
Yeah.
And if that works out, that's great. If it's not, then you can learn from it. Right? That's like a more useful, like, I really want to do well, right? Like, I think everyone who's listening wants to do well in whatever that means for them. Yeah. And if I know that some XYZ behavior is pulling me back from that, I want to cut it out as soon as possible. Yep. And I'm willing to do, like, I'm willing to change behaviors that I didn't know was bad, but like I've been doing for a while. As long as I'm now aware, I'm willing to change. And I think some people, maybe they're like, oh, well, I've been doing it forever. I don't want to do anything about it. Like, that's going to help. That's not going to help you. That's going to hurt you, if anything. Because now that you've identified this behavior that holds you back, you should take some steps to undo those behaviors or override it with another behavior, like doom scrolling at 1 a.m. That a lot of people listening probably do a little bit of it. I mean, everyone does. I used to do a little bit too. And like, I catch myself now. I'm like, oh, wait, I've been on Instagram for like half an hour now. This is a waste of time. And just like, like being able to catch yourself, that's really helpful.
So that is a critically valuable skill. I think what you're describing, are there any techniques where, some people journal, for instance, and then they try to read about what they've journaled or recorded in their day-to-day, or they look at their calendar, the way it's composed, and say, was that productive for me or not? Like, are there any ways that help you kind of separate yourself from, let's say, the day-to-day and look at a higher view on occasion, let's say week to week, month to month?
You're asking about like introspection, right? So
yes. Yep.
I think I spend probably too much time introspecting. Like I spend time like, so it's kind of funny because I just said don't overthink like in-person interactions. But what I meant by that, it was like, don't overthink it in a way that hurts you. Yeah. But I overthink it, and I also overthink, but I don't overthink in a way that hurts my like self-esteem. Yeah. If I overthink, it's like, tactically speaking, what could I have done better? Yeah. And it's just a problem to solve, not like, is my ego going to be bruised or not? Yeah. That's like a useless question to me. The useful question is, I just spoke to like XYZ founder and they didn't like this specific thing I said. Like, I could tell because they furrowed their eyebrows and closed off like this, right? Yeah. And like, okay, what did I say? Maybe I said something wrong. Like, what was that word? Maybe, and if it's something that piqued my interest and I want to spend some time on, I'll think like, oh, maybe I should Google about this, right? Like, ChatGPT is great. Like, if ChatGPT has actually been like an amazing invention for me, especially because I Google like everything. Like, I'm a Google maniac. And so ChatGPT being super Google has been really helpful in like, even just coming up the curve. Like, a couple years ago, I didn't know what LTV CAC was. Yeah. I had to learn that. And like, ChatGPT was only a couple years old, so I'm like, thank God that came around because I had to Google that originally. Yeah. And sometimes people had like weird definitions, and like, it took me a while to figure out like, what is the actual definition? ChatGPT just tells you now. So the new metrics that come out or new ideas that come out, I can just Google for that or chat that, and that's just so much faster. And so sometimes if it's like, I'm talking to XYZ person, what are some topics that they might be interested in? Like, chat will just tell me, and then I can think through like, oh yeah, I can probably talk about XYZ, or maybe, based on my background, what are some common ground that I'm maybe not thinking of? Yeah. Like, that's a useful way, especially because like this role that I have now is essentially 50% sales because I'm also going out trying to convince founders like, hey, I am actually really useful, right? Yeah. And founders have to do that to VCs. And so chat is like really helpful in just perspective shifting around that. Yeah. And seeing whatever things you miss, because everyone misses something and it's okay. Yeah. It's just something that you want to take care of.
So that is critically valuable, because I think something, perhaps an underrated skill of successful founders or entrepreneurs that I've encountered is this ability to value something tangible that you can put into the world outside of your mind or yourself that other people can actually observe.
Yeah.
And there's a lot of value in being an executor, you know, but also in producing tangible results in a way that are, you know, they live outside of your mind.
Yeah.
Some people perhaps overanalyze. Some people fall into analysis paralysis traps. You know, analysis paralysis, like, you know, living inside of your head. I think, you know, when we live in an age where you can ask ChatGPT anything, it's a double-edged sword, right?
Yeah, because you can easily just drown yourself in noise and get no signal out of it.
Yes.
Which also sucks. Like, I think I've done that once or twice. Maybe more than that. But I think, like, the key to solving analysis paralysis is really in, like, how it gets caused. Like, what triggers it is that you have a lot of decisions to make.
Yeah.
Or a lot of choices, and you have to make a decision from too many choices. So if you're going down the rabbit hole in chat and you're just like, I don't know what's important, you can just ask it. Like, what's the actual important, like, 3 things for me to know?
Yeah, okay.
And it'll do it for you.
So that's a helpful query. So what are the most important 3 things to know? Like, you
like,
just
from
throw
this
that
chat.
in.
Like,
exactly.
Yeah, like, if you just spend an hour down a rabbit hole in ChatGPT and you're like, I don't really know what to do with any of this information, you can just say, like, from what we've spoken about, what are the top 3 things I need to take away from this?
So that's a great, that seems like a great, not only behavior, but maybe a habit to pick up. Because these are getting into, like, the ways in which you become, like, let's say, an advanced user of ChatGPT.
Yeah.
Summarize your own context that you produce, right?
Yeah.
And then do you save that and reuse that in a subsequent conversation the next day or coming up? Or do you usually go one round deep?
Oh, I have a bunch of folders. So I didn't know this when Chat first came out, but they offer folders. Or maybe they created the feature and I just didn't know they did that. But so I have, like, sales folder, marketing folder, like, there's a folder for each of my, like, the companies that I've, like, worked with.
Nice.
So, you know, because I'm not going to know everything. That's just a reality. No CFO knows everything. And I'm technically a fractional CFO, not even a full CFO, right? I don't know everything. Yeah. So I just aggressively chat everything I don't know. And I don't mind it. I think one of the things a lot of people need to do is, at least a lot of people that I've seen, is, like, you can ask simple questions. It's totally fine. Like, there's no judgment for ChatGPT, right? It's like, what is IRR?
Yeah,
I have no
exactly.
idea, right?
Exactly.
Like, that's totally fine. If you're listening to this podcast now and you still don't know what IRR is, ChatGPT that. Like, or you can, you know, I may not have explained it very well, and maybe they'll explain it better. It probably will, actually. And then also, you know, using different personas helps, because if you say, like, you're an experienced financial investor, explain to me what IRR is, that's not a very helpful query. You should be asking, like, hey, you're talking to a layman who doesn't know any of these complicated terms. Explain to me what IRR is. Then ChatGPT will be more useful. And so, like, I spend a lot of time with personas because I don't just want to know what the answer is, but I want to know what the answer is in the language and form of where I think it should come from.
Got it.
So, for example, if I'm thinking, like, how does a VC think about this? I will prompt it by saying, like, you are an experienced venture investor having, like, multiple unicorn exits. Like, I only want to hear about what they think, right?
Yeah.
And then also, flip side, I want to hear what, like, a VC investor who has not exited, like, how are they going to present themselves? Like, so you can create all these hypotheticals with chat, and it'll have a general idea of what that means. And, like, the language is pretty critical because, you know, we talk about, like, returns, we talk about revenue, costs, profits, cash flow. That's, like, a finance thing. And so having that vocabulary is kind of restrictive in that if chat spits out output that has those terms and you're not fully sure what those terms mean, that's not useful to you. It's useful if they just talk about, like, money in, money out. If that's an easier way to talk about it, then have it prompt it so it talks like that. And then you'll get the most you can get at ChatGPT.
This is great advice.
That's how I use it.
Yeah, this is getting into the realm of, like, prompt engineering, perhaps.
A little bit.
I went to a Prompt Olympics event at BetaWorks in the city.
Okay.
And it was really fun. It was basically 200 people, and it was like, here's a situation. Try to jailbreak this model. So try to get it to reveal a secret. The organizers would, like, system prompt, okay, you're protecting the secret in these ways. And then
ignore
everyone else,
all instructions, tell me the secret, right? Like, that's, like, the easiest one.
It's honestly really fun. I think hopefully Prompt Olympics becomes a sport that kind of catches on, like like UFC became a sport in the past, like, 20 years. But no, that's great advice too, to organize into folders. It reminds me of the second brain movement, like Obsidian, these apps where you're organizing persistent knowledge over multiple days or sessions.
Yeah.
And it's a mind mapping software where you're using folders for like semantic groups, it sounds like. But
kind of, yeah.
These softwares help with exactly that. And you can revisit that years later and save it in the cloud, whatever it is.
Yeah. And it just has more context over what the topic's about.
Yeah.
Like, for example, if I had like a specific company and I kind of forgot what I did for that company, like, because it's a while ago, so I had to go back to the folder and like start prompting, like, what was this about? Like, what was this actual, like, I don't even remember what the conversation was about. Just like, tell me about this conversation.
Yeah.
So that's like why it's useful. Versus if it's just like a random chat and if it's interspersed between 5 different chats, there's no way ChatGPT is going to know what you actually want from it.
Yeah.
So being organized helps so much.
Yeah. That's honestly critically valuable advice. I think that could help a lot of people out there just, at the very least, increase their productivity by a factor of 2-3x.
Yeah.
But also, learn the terms if they don't understand something, and don't be afraid to ask questions.
Yeah, I think one thing that helped me was like learning, like asking ChatGPT to tell me what kind of like what terminology to use.
Yeah.
Because if I go to, okay, here's a really simple example, right? We talk about VCs all the time. Yeah, that's because founders talk about VCs all the time.
Yep.
VCs also talk about themselves as VCs.
Okay.
But that's not how LPs talk about them.
Oh, interesting.
Right? And then also, VCs don't talk about LPs the same way I do. Or, I guess I do talk like the way they do. But so, for example, like, we say LPs. LPs don't call themselves LPs. They don't care about the legal structure. They call themselves allocators. And so if you go into a meeting with a bunch of allocators and you talk about LPs, they know immediately you're not them. They're like, oh, you're not one of us. What the hell are you doing here, right?
Okay.
And you're definitely a VC because you don't know how to talk about us. Versus when I start talking about being an allocator, they immediately think like, oh crap, this guy actually understands what I'm about. Maybe he's like on our side.
Yeah.
Right. So that just the vocabulary matters a lot. I mean, it matters everywhere.
Interesting.
I think that's something that like people need to kind of keep in mind as they talk to different kinds of people. It's like the vocabulary the listener utilizes is the one you should be utilizing. Yeah. So that way you can maximize what they get from you.
That is great advice, just from a human communication perspective. It reminds me of the Bourne movies, Jason Bourne. Yeah, he opens up the CIA kit. It's got identity. It's got
I haven't actually watched it. Yeah. I know of it. It's Matt Damon, right?
Yeah, Matt Damon. But it reminds me of like intelligence agencies use some of these techniques in order to earn the trust of let's say whatever group they're infiltrating or gathering intelligence on. And it's the same with human communication, right? It's
just talking their language. It helps.
Yeah, mentioning one phrase like IRR could instantly communicate 1,000 things about you. Right?
True. Most founders have no idea what IRR is, and every VC knows what it is. It's like the basic. You can't not know what that is. And then here's another thing. It's like DPI.
Okay.
So every allocator knows what DPI is. Everyone listening, every VC is either happy or very unhappy to hear that word. And I'm not going to explain why.
That's a good ChatGPT question for after the podcast.
Yeah. Because that essentially, like, when I talk to allocators, DPI is like more important than pretty much anything else. And it's really funny to like talk about that because it's just kind of, think of it as like with founders, it's like ARR. It's like everyone needs to talk about it. Yeah. And then they're either happy to talk about their ARR or they're not happy to talk about their ARR.
Yep.
Right. So that's like, these are the terms that like, I like to listen to how people talk. I find that very fascinating. Yeah. I'm not a linguistics guy, but I do find the way people speak and like how they utilize language very interesting. Yeah. And I can go on forever about that kind of thing.
Yeah. No, that's critically important. I mean, both in a sales context, if you're trying to earn early customers, say, especially in the B2B realm.
Yeah. I mean, I was actually talking about generally, like even with friends.
Yeah. Oh, for sure.
Just talking generally, like if a friend's talking about like, I don't know, off the top of my head, it's kind of tough to say, but let's say I have a friend who like loves to talk about music. Yeah. Really simple example is, usually you say like, I understand, I get that. You can also just say, I hear you.
Oh, for sure.
Right? Like that simple things like that sounds better. Yeah. Right? Not that feels better. Yeah. A music person might feel that like sound is more important. So that's the language I try to I just do things to streamline things because to me, like, there's 3 elements to every word. It's the word you use to denote meaning.
Yeah.
There's the meaning of the word, and then there's what like the listener got from the word.
Okay.
And so if all 3 align, then you have perfect communication.
Amazing.
But like every miscommunication anyone's ever had has to do with like one of those 3 things being out of sync.
Yeah.
Right. So like if I say like I like you, and you hear like he's romantically interested in me,
Yeah.
but I only meant like I like you as a person, like that's going to be a problem, right?
Yeah.
And then also if we know that the word like means something very specific in a different context. Like, for example, when VCs say, I like this company.
Yeah.
What does that really mean, right?
Yeah.
It's like, oh, I like the company because XYZ. It could be they like it for the amount of money that the startup gives them. It could be very simple like that. It could be they actually like the person behind it. But that's something you're going to have to find out by talking to the person. And it's like very catered and like a curated understanding of their communication style. That's something that's like very hard to garner just through like reading, I guess.
Yeah.
You can't read that away. You kind of have to meet, well, maybe chat's going to evolve in like 5 years and can do that. But for now, no one can really do that in person. In reading. You can only do that in person.
Yeah. I've heard great communicators actually define, or they'll say, here's what I'm saying, but here's actually what I mean.
Yeah.
And is this how you're
that
understanding
helps too.
it?
Yeah.
So
I do
actually
that a lot
speaking
too.
to those 3 areas out loud, I think also helps build trust because it shows that person empathizes at a level that's like, they care about how you're receiving it, but also how they're sounding.
It's incredibly important. I mean, you can't just spit out language and then hope that the person listening is like, yeah, they get me. Like, not necessarily.
Yeah, exactly.
I remember back in my time at Avenue, it's like half the time. So one of the things you learn in like, not just Avenues, but banking, all the jobs I've had, when I ask questions, especially when I'm digging into assumptions, like doing diligence.
Yeah.
And diligence can be for investment. It could also be for a project or like a product idea or business process. And someone says something and I'll say like, what do you mean by that? And maybe my tone's not the best. So what I usually say is like, what do you mean by that? I'm just trying to understand.
Oh, for sure.
Or like for clarity.
Huge difference.
Or like I'll start off by saying clarifying question.
Yeah.
And that way it like immediately disarms the listener.
Yeah.
Because that way they're not just like, oh, this guy is like questioning me.
Precisely.
Like, how dare he, right?
Precisely.
It's like, no, I'm not questioning you. I just don't get it.
Yeah.
Like, help me understand because I know you want to be heard.
Yeah.
I know you want me to understand you. I just don't get it.
Man, this is very valuable wisdom for the audience because I feel like, this permeates across personal relationships, even, dating and maybe marriage. I would assume that your communication style with your partner.
I use these techniques with my wife too. I'm sure she probably knows, and she doesn't mind because it benefits her that I do that, right?
Yeah.
She can be like, I don't like this, and I'll say like, why don't you like it? I'm not angry. It's not that I'm against it. I just don't actually know why.
For sure.
And that's okay. Like, help me understand so I can do something better for you, right?
Yeah, and honestly, some people fall into traps of misinterpreting what they think other people may actually think about something.
Oh,
so
yeah.
it kind of just clear up all of the fog. Yeah, just clear the fog immediately. Keep your relationships and communication clear.
Have you heard of like anxious avoidant personalities?
I can guess what that means just by the combination of
words. I
words.
just learned what the term means because I knew what avoidance is. Like, for example, like usually like in like romantic relationships, like men are typically more avoidant and women are the opposite.
Okay, interesting.
Like when you like stress a man out, he tends to shut down. He'd be like, I don't want to talk about it anymore, right?
Yeah.
And then anxious avoidant is like, not only are they not talking to you, but they're also like running a million scenarios in their head, overthinking like the worst possible thing.
Yeah.
And so this is where communication is like absolutely critical because that listener, that person is not going to do any work for you, right? They're not going to clarify anything for you.
Yeah.
They're not going to assume the best at all. They're going to assume everything you say is like the worst possible thing.
Yep.
So dealing with, and this is not my wife, by the way, like she's way better than that.
For sure.
But there are people I've met who are kind of like that.
Okay.
Oh crap. This is like actually where you have to really lock in and do your best to communicate as much objective language and like all these like prompts of saying like, oh, I'm just trying to understand, like don't read into this too much. These kind of things is absolutely critical for that kind of communication style.
Yeah. I think from a psychological perspective, and the audience might find this interesting, I learned this recently, that anxiety is actually a signal that you have too many options ahead of you or in your mind. So it's kind of like the reason you're anxious is because you're giving yourself too many options or maybe even the opportunity to think about too many things at the same time, which is where, sometimes constraint or turning chaos to order in that capacity is a valuable skill.
Yeah.
It's something to monitor about yourself too if you find yourself anxious.
I think, for example, people have told me that I have a very structured way of thinking about things. Like, I tend to think in terms of like trees. So
Okay.
like, you know, like tree charts where it's like one box turns into two boxes
Yeah.
and four boxes. So I tend to think that way when I think about options and decisions. And when it's organized in that way in my head, it never feels overwhelming.
Yeah.
Because you can see the tree in your head.
Yeah.
And there's a limited amount of boxes. So
Got it.
and even if there's a lot, I just go through them one by one. Right. So it's like it's never overwhelming. And I think, you know, the structured thinking helps a lot. Like, that's probably why consultants do so well, because all of them master structured thinking from, like, the get-go.
Yeah.
Like, I remember I interviewed for consulting back in college, and I still remember, like, they were not that hard. Like, the interviews were not that hard because most of the problems were problems of, like, if you cannot structure, like, if you can't think in a structured fashion, you just fail. And if you can, then you pass. You don't actually have to know anything. You just need to know roughly, like, revenues is good, cost is bad, profits is revenues minus costs. And like everything else just falls away from there as long as you think in a structured fashion.
Yeah.
And I didn't have to study how to think in a structured way, but I guess like that is something that like a lot of people have trouble with, especially when it comes to things like emotions. Like now that we're talking less about venture and more about like just people, like emotionally, like thinking through your emotions is in a structured way sounds really counterintuitive because emotions should typically be like felt out.
Sure.
But thinking about them or feeling them in a structured way is really helpful.
Yeah.
Like, what did I not like about what XYZ person said?
Yeah.
Like, is it the tone I didn't like? Was it a word they said? Like, was I triggered by anything particular?
Yeah.
I don't know.
And that
But,
comes
like,
back to
but you go through it.
the three modes of perhaps communication.
Yeah, like
right?
maybe it was a word that like I thought meant something. Like that actually happened to me once where like I said a word that like I guess it was not an industry term, but like this is a word that they had emotionally charged and I didn't know.
Okay.
And they're like getting irritated.
Yeah.
And I'm like, I just should not say that word anymore.
Yeah.
Right? But at first I'm like, whoa, crap, did I just like insult them? I don't know what I said.
Sure.
I don't know.
And sometimes to say that out loud, to say, hey, just want to check, was I reading this correctly? Kind of thing.
Yeah, that helps a lot
And someone
too.
can help affirm yes or no from their perspective. No, this is great advice. I think this will actually help improve hopefully a lot of people's lives out there.
Yeah, I mean, this is a people like startup world. Going back to that is like mostly a people-driven business, right? So it's not like the best product wins. There are so many great products have no marketing, no sales, and as a result, like just disappears into the ether.
Yeah.
But then there's like, let's be real, everyone's seen this, like okay products that like kind of work, but everyone knows what they are, and everyone's paying for them.
Yeah.
Like Salesforce, right?
Oh yeah.
Like everyone knows it. I've used Salesforce, and I'm gonna say like I wish it was better. But they had the best marketing, so everyone used it, right? And now like HubSpot's coming in, and like there's other alternatives too. But I'm just saying at the time, like 2010s roughly, when like everyone was using it.
Yeah,
like,
without a doubt. Without a doubt.
It's a big part of its communication.
Yeah.
So this is like how I try to streamline my communication.
Yeah, because launching a product in some ways is just an extension of that at a macro level, right? It's like, here's a product that we're introducing. This is how we'd like it to be received.
Yep.
And how is it actually being received?
Yeah. That usually is not the same. It's almost never the same.
Yeah.
Yeah.
So great marketing teams can find a way to align those probably across all three aisles. And also one more tidbit for the audience is that something I've learned too is that like people feel so many emotions, right? And it is very, very rare. Like not to say never, but it is extremely rare that you are feeling something alone.
True.
Whether that's like anxiety or, indecisiveness, or you're struggling with an early stage startup. So don't ever feel like you're isolated. I think that's like something important to realize. And one of the benefits of co-working and coming out to these events is that you get to learn that, wow, there's a lot of people going through the same things.
Yeah. I don't think there's like humans have been around for like civilization's been around for like 10,000 years or something, right?
Like modern humans.
Modern communicative like civilization with like villages and stuff. Emotions, we haven't evolved that much in 10,000 years. So I'm pretty sure like all the emotions I feel have been felt at some point before by someone out there. Like I take comfort in the fact that I'm not completely alone.
Yeah.
And like I hope that I meet people who feel the same way in certain situations.
Yeah.
And if I can help someone who's dealing with something I've been through before, then I can be very equipped to handle it.
Yeah.
Or help them handle it rather. But it all comes down to like the communication of it. Like, are they able to also tell me that they're feeling a certain way, right?
Yeah.
Like that becomes a practical problem because maybe they're not good at talking about their feelings, which a lot of guys, for example, suck at talking about their feelings.
Yeah.
But I think I've gotten a lot better at just like just aligning the three things, right? Like what I say, the words, actual meaning, and what they hear.
Yeah.
Like that, those three, as long as they're always together, it's not that bad. It's really not that hard.
No, honestly, that is actually a life-changing piece of advice if people put that into practice. So thank you for sharing that. I think that's something to remember for life.
Yeah, I'm happy to share. I didn't know that this was like going to blow anyone's minds. Maybe it does. Who knows?
Oh yeah, no, I mean, some people might be like, oh yeah, of course, but I think a lot of people, including myself, I haven't thought about it in such a. That's the most eloquent way I've heard it described. I'll say that. It's something easy to remember too. It's a model that people can just store away in their minds.
It's a simple model that like I've just put in practice, and over time I've gotten very used to it.
Yeah.
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 It's a matter of practice, but you don't have to like consciously practice it. It's just something to keep in the back of your mind.
It's just, I've seen so many relationships be either negatively impacted in some capacity or even fail sometimes for avoidable reasons.
Oh yeah, definitely.
Right?
You see it in like TV shows, but also in real life. It's like it's really sad. Like someone says something, the other person takes it the wrong way, and then like anxious avoidances comes out, and like no one talks to each other.
Yeah, that's sad.
Everything falls apart. Yeah,
that's a tragic story that can be avoided. So if this advice helps avoid even one of those stories in any viewers' lives, including our lives,
then my mission is complete.
Yeah, then this
not
is
even
a
the
huge
finance
success.
Just fixing a relationship. That's all that matters. I've done my job. I can go home.
Yeah, because the world will be a better place if people practice that. I think in their day-to-day lives. I think with that sentiment, by the way, Ronald, I do want to thank you again. This has been an amazing chat, and really appreciate your time today.
Yeah, I had a lot of fun doing this. I didn't think we'd end up touching on these topics near the end at all. I thought it was going to be all kind of like startup tech stuff.
I think both are very important.
Great, a lot of fun.
Yeah, both are very important schools of thought, and both go hand in hand in entrepreneurship, right? Because you're, as Ronald mentioned, you're dealing with people, and people are emotional, people are unpredictable.
Yeah, we're not at iRobot yet. Like,
yes,
it's just really far away. I don't care how many times you see like Figure just look at those robots putting fruit away. Like that's still years away. We're not having that very soon. At least I don't think so.
Yeah, I mean, we'll see like with AGI and like these big movements coming up. What happens with the humanoid robot kind of boom coming up? But
even if we have AGI, it's gonna take a while to deploy it.
Oh, for sure.
People think that once we have like a humanoid robot, we're gonna just have robots everywhere. It's like no, they're gonna cost like $100,000.
Yeah.
Only the super rich will have it.
Yeah.
And we're gonna have like 10 more years before we get like maybe happy ending. I don't know if anyone's seen the Broadway show.
But,
it's like personalized robot attendants.
Okay.
Like, that's still a long time away.
Yeah.
For like a regular person to be able to afford one.
Yeah, and manufacturing curve has to catch up and become cheap enough for mass production. All these challenges,
that still takes
right?
a lot of time. So even if we get to like the magical like Brett Adcock super awesome robot, that's still then we have to wait for it to deploy. En masse, and that takes a while too.
Precisely.
Yeah.
And I mean, even if that was around, the human relationships still are, in many ways, they're foundational to our happiness in this life. And, so honestly, Ronald, thank you again. So for the audience, if they want to check out, let's say, your services, or they want to reach out, maybe they want to discuss a potential collaboration, are there any kind of, are there any sources or places they can go to learn more about you?
So LinkedIn right now is still the best way. People have been bugging me to make a website, and I've been very lazy about it. But also LinkedIn's super easy. You just type in my name. I'm like one of the only Ronald Zhangs on the East Coast.
Yeah.
There just aren't that many, so it should be pretty. And I'm also the only one with a fractional CFO title.
Okay.
So, or description rather. Respond to messages pretty much whenever I can, and I try not to leave anyone on red, as they say.
Yeah.
If people have questions or they want help or they need me for like a fractional role, I'm very happy and open to discuss.
Amazing. And we will link Ronald's profile in these posts, so please click on the link if you want to learn more. Ronald, thank you again.
Yeah.
Appreciate it.
Man.
Yeah.
Thanks for having me.
Cool. Until next time.